What if the world's strongest currency starts to stumble? For nearly a century, the U.S. dollar has ruled the world's financial stage, the currency of oil, trade, and global power. Nations held it like gold. Investors trusted it like law. But in 2025, something began to shift, quietly at first, then unmistakably. The greenback, the very symbol of American might, started to lose its shine. Some blamed politics. Others pointed to global conflicts, inflation, or debt. But beneath all the headlines lies a deeper story, one written in the invisible forces of economics, interest rates, trade balances, and global confidence. This is not just about money. It's about power, the kind that builds empires and breaks them. Welcome to the story of how the dollar, once untouchable, began to tremble. The dollar didn't just become powerful overnight. Its dominance was crafted, piece by piece, through war, innovation, and trust. After World War II, the Bretton Woods Agreement crowned the U.S. dollar the center of the global financial system. It was backed by gold, and nations across the world tied their currencies to it. The dollar wasn't just paper. It was a promise that America's strength would secure the value of money itself. Then came 1971. The gold link was broken. Yet, the world didn't abandon the dollar. Why? Because no other nation had the same economic muscle, military reach, or stable government. Oil was priced in dollars. Trade was settled in dollars. Even crises were solved in dollars. But dominance breeds dependence. The same global trust that built the dollar's empire also made it fragile. When one currency stands above all others, it carries not just power, but the weight of the entire world economy. Now, that weight is beginning to crack. And to understand why, we must look at the forces that determine what a currency is truly worth. The value of a currency isn't decided by politicians or printed by machines. It's determined by the delicate balance between trust, demand, and performance. At its core, currency value is about confidence. Investors, traders, and nations constantly ask, how strong is this economy? How safe is this money? Three major forces drive the answer: inflation, trade, and interest rates. When inflation rises, money loses purchasing power. Prices climb, and each dollar buys less. It's like sand slipping through your fingers. Too much supply, too little stability. Trade deficits also pull the dollar down. When the U.S. imports more than it exports, more dollars flow out of the country than come in. That means less demand for American currency abroad and a slow erosion of value. Then there are interest rates, the pulse of global finance. Higher rates attract investors seeking returns, boosting demand for the dollar. But when rates fall or inflation eats into real returns, that demand fades. These invisible levers move markets every second. And right now, they're all tilting against the dollar. Every empire faces decay, and for currencies, inflation is the silent thief. Over the past few years, prices in the U.S. have risen faster than incomes. Groceries, rent, and fuel became symbols of something deeper: the shrinking power of the dollar in people's pockets. When inflation surges, it doesn't just affect citizens. It ripples across the globe. Investors begin to doubt. Foreign buyers hesitate. Central banks diversify. The faith that once made the dollar as good as gold starts to fracture. The Federal Reserve tried to fight back, raising interest rates, tightening money supply, signaling control. For a moment, confidence returned. But the medicine came with a price: slowing growth, falling investment, and fears of recession. The dollar's strength was built on stability. But in a world of rising debt and endless money printing, that stability now looks fragile. Inflation doesn't just reduce value, it reshapes perception. And once the world questions a currency's strength, that question spreads faster than any crisis. The U.S. has long been both the world's biggest buyer and borrower. Every container that arrives on American shores, filled with electronics, clothes, or cars, tells a story of imbalance. When America buys more than it sells, dollars flow outward. Those dollars end up in foreign reserves in China, Japan, Saudi Arabia, fueling global dependence on the U.S. currency. For decades, that system worked. Nations needed dollars for trade, and America could print what the world demanded. But now the loop is breaking. Countries are finding new partners. China trades with Russia in yuan. India pays for oil in rupees. The BRICS nations talk of a shared reserve currency. As global trade diversifies, the world's need for dollars shrinks. And as that demand weakens, so does the dollar's strength. The trade deficit is no longer just a number. It's a symbol of shifting power. The empire of the dollar isn't collapsing overnight, but it's facing competition for the first time in generations. The question is, can America adapt before the balance tips too far? Interest rates, the lifeblood of global money. When the Federal Reserve moves, the world listens. For years, high U.S. rates pulled in capital from everywhere. Investors flocked to American bonds, drawn by stability and yield. But as the global economy cools and inflation lingers, the Fed faces a painful choice: keep rates high and choke growth, or cut them and risk a weaker dollar. Either way, the illusion of control is fading. In the past, a dollar crisis could be calmed with policy or confidence. But today, the forces are bigger. Debt levels, automation, geopolitical rivalry. The dollar is no longer the only safe haven. And as other nations rise, their currencies are claiming more space on the world stage. The euro, the yuan, even digital assets, each one a small crack in the dollar's foundation. The throne remains, but the crown trembles. The dollar may be weakening, but that doesn't mean it's dying. Every empire of money faces moments of doubt, moments when power feels fleeting. Yet currencies, like nations, evolve. The dollar might lose its monopoly, but not its influence. Perhaps this is not the end, but a rebalancing. A world where no single currency rules all, and power is shared among many. Still, one truth remains: when the strongest currency stumbles, the world shakes. And as history reminds us, it is not just what is in your wallet that matters, but what the world believes it's worth.